Good afternoon. Welcome to the Monetary Policy Stance press briefing. Before we introduce our speakers, we'd like to inform everyone that the Monetary Policy Statement was uploaded on the BSP website and X account earlier at 2:30 p.m. For the full statement, you may check these platforms. Let us now welcome the following. Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Eli M. Remolona Jr. Deputy Governor Zino Ronald R. Abenoja of the Monetary and Economic Sector, and Officer in Charge Dennis D. Lapid of the Monetary Policy Subsector. At this point, may we invite Governor Remolona to share his remarks on the monetary policy decision.
Good afternoon. The Monetary Board held its regular policy meeting today, guided as always by our primary mandate to keep inflation low, which supports balanced and sustainable growth. Today, we decided to cut the BSP's key interest rate by 25 basis points. This brings the RRP rate down to 4.25%. Inflation remains manageable. Our forecasts do indicate a slight uptick in inflation this year, but this is due largely to supply-side factors. While these factors are largely temporary, they will require continued vigilance with regard to possible spillover effects. We forecast inflation to move closer toward the 3% target by 2027. We are reassured that inflation expectations remain well anchored. Growth has been softer than expected. Investment slowed. We attribute this to a lack of confidence. But soft data on sentiment show tentative signs of recovery. Our decision today may actually help to restore confidence, boosting investment and consumption. The pace of economic recovery will depend on how quickly confidence returns. As always, policy decisions will be driven by the data we have at the time we make those decisions. Thank you. With that, I turn over the mic to DG Sino for more details.
Thank you, Governor. Good afternoon to our partners, counterparties, and the media. Just to add to the statement of the Governor, may I also provide some quick updates on the average inflation that we are seeing for this year and next year. As we continue to reiterate, what we are seeing is the inflation not only in the near term, but more importantly, the inflation outcome moving forward in the second year of the horizon. This is the period where monetary policy will have most of its impact. So in the last policy meeting back in December, the forecast was an average of inflation rate of 3.2% for 2026 and 3% for next year, 2027. We now see inflation increasing slightly to 3.6% average for this year, but it will gradually go down and move closer to the 3% target at an average of 3.2% by 2027. Now, what could be the factors behind the increase in the near-term inflation numbers? So what we are seeing are some impact coming from electricity rate adjustments. Some of these have been announced already back in December and in January. We also anticipate the impact of the flexible rice tariff mechanism on domestic rice prices. Oil prices are also higher if we go by what is seen in the futures prices. So these are some of the key factors that increased the inflation forecast for 2026. And as the governor has emphasized, these major factors are mostly supply side factors. The impact may not be persistent and could fade away after some period of time. Maybe just to add, of course, there could be some what is called the base effects also playing particularly for the first half of 2026. So thank you.
Thank you very much, Deputy Governor Abenoja. At this point, we now open the floor to questions. We will first accommodate questions from our on-site participants. This will be followed by questions online. For on-site participants, reminder to please raise your hand and wait for the microphone to be handed to you. Please also state your name and your organization. We are now ready to take your questions.
Good afternoon po. Catherine from Business World. Since you expect inflation to accelerate this year and until 2027, although you noted that it may soften by that time, how much does this narrow your easing space going forward?
It will not quite accelerate. It will rise a bit. I think at the highest point, 3.6, which is still within our tolerance band. And that's mainly just because of one-time adjustments in supply factors like electricity rates. And then it will just come down to 3.1% for 2027. For us, the relevant horizon is really 2027, given the lags of the effects of monetary policy. So we're really looking at 3.1%.
Just to follow up, po,
3.2.
that 3%, the 3.6% highest point that you mentioned, is that what can we expect that this year or?
It's our forecast for 2026.
Thank you, Governor. Next question, please, from this side.
Good afternoon, Governor. Denise Osorio po from PTV. Sir, in line po with her question earlier, there are some analysts who are penciling in further cuts for the rest of the year if growth stays soft. So what conditions po would make a longer easing path and appropriate, and what conditions would stop it?
I think the single biggest factor at this point is how soon confidence will return. If we don't think, we think confidence will return pretty soon, within a few months. So if we're right, then we won't need further cuts.
Thank you, Governor. Any more questions?
Good afternoon, Governor. This is Kisha Taasan from the Philippine Star. How close is the BSP to the end of its easing cycle? We noticed that your statement now versus compared to the statement in December, wala na po yung nearing its easing cycle. So how close it is po?
We're now in a situation where it's more conditional on what happens to confidence and growth, because in December we were more confident that confidence will return pretty soon, but and the effect of confidence, the lack of confidence actually turned out to be bigger than we thought since December. When the Q4 number came out, we were very surprised. And so now we give a bigger weight to confidence, and we give a bit bigger weight to how soon it will come back.
Thank you, Governor. Any more questions?
Good afternoon, Andrea San Juan from Business Mirror. Governor, you've been mentioning about confidence, hoping to bring back confidence this year.
how do you expect or envision the previous rate cuts alongside the quarter point rate cut today to support the economy moving forward? Can you elaborate more on how will confidence be translated to real economic impacts? Thank you.
To be honest, we underestimated the impact of confidence on our growth rates. We've calibrated our models so that they give more weight to the role of confidence. We thought we didn't think the Q4 number would be so low, and that told us that actually confidence plays a bigger role than we thought. When the flood control scandal broke out, we recalibrated our models to take account of confidence. I think the recalibration wasn't enough to anticipate what will happen in what actually happened in Q4. So now we have some further work to do, and we now realize that it's a bigger factor than we thought.
Yeah.
Yeah, we're looking at 6 numbers that reflect that measure sentiment, and then we collapse them into a single factor that reflects the common movements in those 6 factors, and then we're gonna stick it into our models, and then make sure that the models are consistent with what happened in Q4.
Thank you, Governor.
Sorry for that nerdy answer.
Next question, please.
Hello po. You previously mentioned that you were revisiting your growth forecasts for this year and the following year. Can we have an updated figures for your GDP growth forecast?
You realize these are forecasts with a large degree of error because they depend largely on confidence. Do we have a forecast for GDP growth?
As the governor has mentioned, and that's also stated in the press statement, the growth outlook now plays very important in the assessment of the monetary policy. And underlying that will be some understanding of the extent to which sentiment is improving and how that would translate to a better economic activity. Governor has mentioned several things that we are looking at as a guidance on where sentiment is right now. We've discussed before, for example, we're looking at the PMI numbers. We are looking what's happening in the government securities market and also in the equities market. And there are some tentative signs that there is some improvement in near-term sentiment, at least in the early part of this year. We will also be looking at the results of the BES and the CES to inform us of this pace in recovery in sentiment. Now, having said that, the growth rates will then are very much calibrated on how we think that sentiment translates into better numbers for economic activity moving forward. So for 2026, we think that the growth numbers will be a bit better than what we saw in the second half of last year. Let me just to make sure I get the numbers correctly. So for 2026, it will be slightly better than the 4.4% average we've seen in 2025. But by 2027, we think we'll be closer to 6%, maybe slightly below that by 2027. Again, this is conditional, as the governor has mentioned, of our understanding of the recovery of sentiment and investments moving forward. The data that will be available in the next few months, in the next quarters, will be important in shaping our outlook for economic activity this year.
Thank you, DG Zeno. A question from this side, please.
For Sir Karen Roto. Sir, follow up ko muna yung sagot mo about the 2026 growth. Could we just get the exact figure for 2026? You said it's better than the 4.4% average. So what figure are you looking at for this year?
What's the 2026 number?
So,
2026, 4.6
4.6.
for growth, and then 2027 a strong recovery to 5.6,
Yes.
5.9, 5.9%,
Tapos na tayo sa 20.
5.9.
Tapos na tayo sa 2027.
So it's 4.6 average GDP growth for 2026, 5.9 by 2027.
Very good growth potential.
Okay. Okay. Governor, just to follow up to the nerdy response, to the nerdy response you gave, a question about
Whose
that.
response was that?
Yours. You said it was a nerdy. I just want to understand, Governor, in the recalibration. So this model that you're looking at, what does it exactly capture? And what does the figures, am I correct in describing them? Are these data points? What do they tell you at the moment? If you could probably give us a comparison of where they were, maybe in Q4, and where they are at the moment in this time, because you said that you're seeing some green shoots in terms of confidence. What's my follow-up question? Yeah, basically that government, and what changed exactly? What could have pushed this change? Because I guess if we're going to ask the people, they're still waiting for convictions, people being held into account, which I think we're not seeing yet. Thank you.
So we try to measure confidence in terms of a few indicators, sentiment numbers, and then we collapsed that those. We had three numbers before, no? We used three numbers, three indicators. We collapsed them into one. We just looked at the common movements in those three numbers. We stuck them into our investment equation in our macro model, and it gave us a number for Q4 that was higher than 4%. So we were surprised that it was so low in Q4. So now we're going back. We now have 6 indicators, more reliable than just the 3. And then we're gonna go back in history and estimate what the effect of those had been going back. And we expect to see a bigger effect. And then and it should more or less predict the 4% number the last time. And then it also should show that if confidence comes back, then we will have a boost to growth this year, starting maybe second half of this year. What changed is the variable that we use. What changed is the growth was lower than we thought.
Giving you a better outlook. So what exactly changed in those data that you actually saw?
Yeah,
Are people now more willing to invest? Are people now more willing to spend their money because they're seeing, like you said, their confidence, your ability to regain the trust?
We're seeing tentative signs of the return of confidence.
What's the best evidence, Gov, that's there? What would be the best evidence that it's actually there? These tentative signs, if you could give just concrete, you know.
Yeah. So thank you again for that question. Just to provide a nuance. So we were capturing the sentiment over a certain period of time. The governor has mentioned we're looking at several indicators. The purchasing managers index is a soft data. The confidence indices from the expectation surveys, both BES and CES, are there. We're looking at financial markets. We look at equities market and the exchange rate market. We are looking at other, aside from the survey-based, the news-based indicators to gauge sentiment based on news coverage, including policy uncertainty related indices, things that we have discussed before. Now, those indices, those numbers, they have a common factor. And this is what the governor is saying. There's a common factor that drives them, and that provides a good measure of the overall sentiment. Now, if you look at what has happened since last year, that particular index was better early part of the year in late 2024. And then we have some announcements on tariff to be imposed by the US. So it has come down. And then there was announcements on the infrastructure spending leakages. It continued to come down. And what we have observed is that by Q4 of last year, that index has further come down. And it usually takes about 2 or 3 quarters for it to have a full impact on investments. So there will be an impact for a couple of quarters. Now, the government has mentioned there are some early this year, we're looking at better equities market. The exchange rate is not as volatile as before. PMI numbers is a bit mixed. If you look at the confidence from the expectation survey, there could be some also tentative signs of recovery. And again, that could take time to have the full impact, but we expect that to improve the outlook by the second half of 2026. So that helps describe the outlook, how we look at some indicators and how we appreciate the outlook will be. How fast that tentative signs of sentiment, how big will those be? That will be part of our vigilance. But equally important, or even more important, will be the developments on inflation numbers, as the statement and as the governor has earlier mentioned.
DG, maybe just to quickly add, the team also looked at the historical data where you had shocks before to confidence. And the data shows that as a rule, investment tends to bounce back very quickly, maybe even after a quarter or so, that tends to recover quite quickly. So the thing is that maybe this episode is a little different, where the investment will take a little more time to recover, maybe 2 or 3 quarters. So that's been factored into the forecast, and a big part of the recovery for the second half also involves government spending getting back on track, and in terms of the fiscal spending targets for the year. And maybe the other point of surprise that we saw in the fourth quarter GDP data was also consumer spending, where we normally expect a strong seasonal component for fourth quarter consumer spending, and that was turned out to be a little weaker than we expected. So that's all. So I think if you look at the monetary policy report that we'll be publishing next week, I think we also have a discussion on some scenarios where domestic demand might be affected by weaker consumer spending as well.
Thank you, Sir Dennis, and thank you, DG Zeno. Question.
Good afternoon, Governor Ditas Lopez from Bloomberg. Governor, last week you were quoted when you seemed to suggest that monetary policy has its limits in terms of influencing growth. In the words, has its limits in terms of
its limits.
has its limits in terms of influencing growth. In the worst case scenario, when I hope it's not the case, but in the worst case scenario, when confidence doesn't return this year, are you going to pull the plug on more cuts, or is there any indicator that we should watch for when you can say, let's keep cutting or let's stop this or we've done enough? Thank you, Go.
As you know, our primary mandate is inflation. It's price stability, which means low inflation. So the first thing we look at is the inflation numbers. Now, the inflation numbers affecting the inflation rate depends on how much room we have on the demand side. So if there's plenty of room, in other words, demand is much lower than what we call potential output, that room allows us to ease further without causing any inflation. So that's a critical point. We support growth. We do want the Philippines to grow. But at the same time, our main mandate is still inflation. So to the extent we can support growth without causing inflation, we will support growth.
Thank you, Governor.
Governor, just to double down on that, should markets expect further rate cuts this year, or how much easing is still on the table?
I would say we don't know. It depends very much on whether confidence comes back as soon as we expect. But that's a big if.
Thank you, Governor. Next question.
Governor, does this mean that we are slowly shifting to a more data-driven, like pause and assess type of model?
We have been data-driven, but we haven't really taken seriously data on confidence because it wasn't so important in the past few years, and so we're data-driven, but we're also gathering more types of data that will help us understand what's going on at the moment.
Gov, just a follow up po. When it comes to confidence, especially with the ASEAN chairship this year, are we seeing that like have a huge impact on the confidence, especially when it comes to our investment confidence?
What has a huge impact?
Our ASEAN chairship this year, will it have a huge impact in investment?
Oh. Yeah, it will have some impact. It might also depend on what happens in ASEAN. We're involved in the discussions for the ASEAN meeting. We have our own proposals, and we're talking to the other central banks and trying to get them to agree with our proposals. I can talk about that at length, but I don't think you want me to do that.
Thank you, Governor.
Governor, good afternoon. Orwell Castro, Malaya. So this is your ninth rate cut so far since August 2024. There's a concern that the rate cut has yet to be fully priced in by the real economy. So may we get your comments on how long it may take for the market to fully price in these rate cuts? Thank you.
The lags, the effect on the economy, as you know, come with a lag, with long lags actually. The effect of the rate cuts may take, I think, from between 1 year and 2 years. So the lags are long.
Thank you, Governor. Next question, please.
Good afternoon. Speaking of ASEAN, as the chair of the central bank governors of the region this year, I understand, I think you'll be meeting sometime in April, if I'm not mistaken. So what will be the priorities that you want to push through in terms of region-wide reforms or policies that you want to highlight during the meeting?
We actually started meeting last year. We met with Bang Negara, was it November?
Yeah.
We had a whole day discussing with Bang Negara what their initiatives were that we could continue this year. And we also suggested what they could support in terms of our own initiatives. I think the meeting went very well. We were kind of modest in our proposals. They were more ambitious. They wanted our own initiatives to be bolder than we had anticipated. So that's a good sign. And then Bang Negara will help us talk to the other members of ASEAN. The governors are all good friends. So this is not a difficult thing to do.
I can mention the 3 items that I mentioned.
Yeah, I don't know if it's time. Zeno wants to mention the 3 initiatives that we want to push. Basically, they're about deepening our capital markets and then making it easy for payments across the region to take place. Digital payments.
And Gov, just a very quick follow-up to that. I think it's been pushed by the governors across the region to have an ASEAN-wide system where payment is more flawless and more flawless. So
Yeah.
do you expect some significant achievements or milestones this year where you can finally roll out that kind of system that you're envisioning for the region?
ASEAN is like 10 countries, 11 countries. Thank you. The initiatives will work first with a few, not with everybody. Some are more ready than others. So I think Malaysia, Philippines, Thailand, Indonesia, those initiatives can be quickly adopted. And then we'll work on the other members of ASEAN.
Hi, Gov. Drea po from Bloomberg. Gov, typically your policy statements gives us a clue or an idea where the policy is heading in the next few months. In this case, it doesn't. So, why is that so? And is it fair to characterize that you're in a wait and see stance at this point? Thank you, Gov.
No, absolutely. In December, we were much more certain of where the economy was going. We had a shock, and we thought we would recover from that shock fairly quickly. It didn't happen, so now we're less certain of where we want to go, where we would go, and it depends a lot more on the data that comes out. So the forward guidance is less clear now than it was.
Thank you, Governor.
Wait lang, follow up. Gov, you talked about a while ago of that space, of that room wherein you can support growth without spurring inflation. How much room do you have now to ease further?
Yeah. It's called the output gap, by the way. If you wanna go to Perplexity and look it up, it's bigger now than it was in December. But how big is it? The picture makes it look very big, but
It's much bigger and
it's much bigger than we thought.
Than we thought. But yeah.
So you have space or room to ease. You're just waiting for to cut. You're just waiting for
We're waiting for the gap to close. If confidence returns in a strong way, then that gap will close very quickly.
Sir, same question but different reframing. No, let's go over because first you were asked a while ago why. Of course, it was noticeable in the statement, as Keisha mentioned, that you clearly dropped the words where you said you're nearing the end of your easing cycle, which could mean that you're probably just going to pause from now, for now. But Governor, since you said that you're giving weight, growth has so much weight at the moment, and yet your growth forecast is better than what we saw last year. So does that lessen the pressure on the central bank to cut rates, given that the outlook for growth this year is at least rosier? Or are you saying that that growth forecast, which would actually require more easing on the part of the central bank to achieve that outlook? Which is which?
We're we're less certain about how soon confidence will return, and we also realize that the effect of it is bigger than we thought. So you combine those two things, that makes us less certain of where the economy is heading in the next quarter or so.
Thank you, Governor. For our last question, we can take it from online. This is from Mr. Michael Ricafort of RCBC. How will the BSP pace future cuts in the reserve requirement ratio of large banks following the recent softening of Philippine economic growth?
The reserve requirement.
How will the
While you were asleep, we cut the reserve. We removed the reserve requirement on deposit substitutes and trust accounts. So you may not have noticed that we're already cutting the reserve requirement. It's not the big reserve requirement on the basic bank deposits, but we've cut the reserve requirement on the smaller deposits. Not small in size, but small as part of the balance sheet of banks. So it's happening. We think we could do more. It's just a matter of timing. It's just a matter of managing the liquidity. We have a big treasury security that's maturing this year, and so we have to take account of those things.
Thank you very much, Governor. And this ends our Monetary Policy Stance press briefing. We would like to thank everyone, including those watching us live on Facebook, for their time and attention this afternoon. Maraming salamat po.